We're an educational company, so what we're going to do in these daily videos is talk about the overall markets, dig into the devil of the details, and look for opportunities. When I find those opportunities, I'm going to throw them out here in these webinars and talk about those, or in these videos, and really talk about those, because those are the trades I'm putting on, when, where, and why I'm putting them on. And then I will also, in these videos, talk about when I take those off, when, where, and why I took those off. So what we're going to do is really build from simple concepts to real life examples, and then try and get you to a path where you understand options intuitively. And I think I can do that for you quickly. So if you guys want an edge, you got to start with education. So if you want to do that, hit that subscribe button down there at the bottom. Also, you can click on a notification bell so that when I pop on here unannounced, that you'll get a notification for that, because later on in the afternoon, I might pop on at any given time and talk about something I see in the overall markets. These morning ones are scheduled, so you will know exactly when, where those are happening. But the other ones, you might need a little bit of a notification there. Also, comment over there at the side throughout this video. If you want me to cover a specific stock at any given time, throw it over there, and you guys will drive the content that way. Finally, smash that like button. It does help us out. All right, without further ado, I'm Eric Wilkinson. Let's talk about some economic data. Across the pond, we got the German IFO, I think it was called, the IFO Business Climate Index. Now, that came in slightly lower than expected, and might gainer a little bit of weight somewhere, but we already saw those PMI numbers, and you've heard me talk about those. Those are forward-looking. So I'm going to hold more weight in the flash manufacturing PMI estimates than I am on the business climate index, because this is the business climate index is you're asking me how I feel about the overall economy, if you will, or the business climate. Now, where these flash manufacturing purchasing managers index is really, putting your money where your mouth is. If you see the demand, then you're actually purchasing those goods and services that go into the manufacturing process. So that really is a catalyst of really looking forward than something like this business climate index here. The other thing we got here in the United States is new home sales. And I wanted to throw up this chart for you guys, because new home sales came in lower than expected at 676,000, expected to be 800,000. Now, that would generally make us think, hey, man, that was a pretty massive pullback. A lot of people talking about bubblicious market in the housing market. Well, at the end of the day, when you look at this chart and you go all the way back to 2000, you can see that the home sale numbers from 2000 to basically 2008 here was well above 750,000 there. So we could almost say that this line that we got today is well below even the average for 2000 to 2008. That's when we start to see these home sales pull back. Heading into the pandemic, we were incrementally seeing these home prices clip up. Now everybody's talking about the massive jumps in these home prices recently, and I've been one as well to talk about how fast these home prices are moving up. But the thing is, those new home sales, this isn't reflective of the price of those homes. Now, some of that could be what's weighing on the market for the new home sales is as these prices go higher and higher. If I was looking at a house this month, I might not be able to afford it next month. Okay, so that's kind of what people are going through right now, is every month they're seeing a 10 to 20% increase in these home prices. So if you didn't jump on board, you might be missing the boat there. But I just want to put this all into perspective. Yes, it is a little bit lower than what we were expecting coming in here at 676,000. But something to note with that is you can see that that number is coming off of some of our highs that we've been seeing here. Now, at the end of the day, it's not nearly as bad if you put it into perspective as what we've kind of been seeing. So it's not a major dent in what's going on in the economy. A lot of people are going to be talking about that as a headline number, but for the most part, we're not going to be able to even see that because I forgot to share it, folks. Here, I'll throw it back up there. Here is the chart I was just talking about because I forgot to pull it up here. But you can see that the levels that we're at right now currently with new home sales is this 676. But what I'm talking about is back here in 2008. Before that, home sales were doing pretty good. And heading into this is a pretty nice trajectory. So when you start hearing about a bubble, you get these incremental moves higher. It's really not that bubblicious, folks. And yes, we are back down to what we saw heading right into this 1 year ago. This is the lowest level we've seen in a year, to really put that into perspective. And we've seen this market kind of spike a little bit. But when you put it back in the last 2 decades, it really isn't that major of a pullback, considering what we've seen in the past. So just to put it into, apples to apples, as close as I can do, that's what we're going to look at. Sorry about the calibrate. I don't need to calibrate my pen. It's working. All right, so let's talk about the markets. Crude oil. I've been talking about this, these 70s or even the 77, 80s, 100 people have been calling. I don't think we're going to see that. Definitely don't think we're going to see that this year in the 80s. I think we're going to see this market actually have more risk to the 60 handle than it is to the 80. So right now we are relatively in between there, between mid 60s and mid 80s. So I would say the risk is to the downside here to go down into the testing that 60 handle versus going up and testing that 80 handle at this point. And what I mean by the 60 handle, trading with a 59. All right. So it's basically 10 up, 10 down from here. What's your pick 'em on it? For me, it's to the downside at this point for gasoline. Now, bonds are pretty much unchanged on the day. You can see this up 4 ticks, but that can be made or erased at any given time. Now, we were seeing some strength in the bonds off of some of those new home sales, but I think the people are just saying, hey, listen, it's just a bit of a pullback here, a bit of a breather at this point in time as people are going to retool and die. Now, Bitcoin making a big move to the upside, one of the bigger moves we've seen in quite some time here for Bitcoin, up 6,000 points on the day. Now, I was talking about risk being to the downside in at least Bitcoin because I was expecting us to come down and cover the gap between, I think it's like 26 and 24, and to fill that gap in before we started moving, since we were so close to that. But something that we heard today was that Amazon is giving out, or we're hearing out of Amazon, I should say, unsubstantiated reports that they are going to possibly be accepting Bitcoin. So that's giving a bit of a boost here to the upside in Bitcoin. Something that I wanted to talk about the last week, and I forgot that I think it's close to, it was some statistics on the exchange of Bitcoin, and it's pretty staggering, to be quite honest, how much Bitcoin has not actually transacted. And I don't want to give the wrong data points, but it's upwards of, I'm going to say 80% of Bitcoin is held in illiquid entities. 95% of all Bitcoin have never been transacted or traded hands. So this is a big deal for something like Amazon. A lot of people are struggling with getting in and out of some of these Bitcoins, but if I could spend maybe a little bit of it, then that might be something that creates a lot more acceptance. And Amazon being a juggernaut in retail and just, commerce, that is something that could really cause all of the dominoes to start falling and accepting Bitcoin. So I would say, although it's got a lot of headwinds with the name Boomer Coin and all of those things, this acceptance by Amazon is a major deal there. Something else to note with this whole issue on the chip shortage, that's supposed to last through 2023 on for some of these cars and automobiles going forward there. It's something I forgot to mention last week that I just noticed in my notes as I was spinning through those for you folks. All right, gold is coming off a little bit. I think that at the end of the day, we probably will retest that 1800 handle. I think that right now we're seeing some strength in the dollar, probably a lot of people throwing some money towards that Bitcoin as it's making a bit of a move. And that lack of demand for gold is what we see a lot of times when we see some of these big moves in Bitcoin. There's a bit of a rotation there. Now, Nasdaq, again, new all-time historical highs. Now, Friday, you guys remember me talking about this. We're in the summer markets, for one. So the markets are going to bleed in one direction or another. In summer, they have a tendency to kind of get a little bit of momentum, and it's kind of like that snowball, I guess, rolling downhill, that it just starts going. There's not a whole lot that can stop it. Well, summer markets with low volumes, that's kind of what we have a tendency to see here. Now, Nasdaq near the all-time highs here, as we're seeing, but again, we're getting these topping patterns in the markets where this would be a topping pattern. We're going to have to keep our eyes out for this at the end of the day, but right now, this settlement would make me look for a confirmation on this. So this is the setup candle right there, and you get a candle tomorrow. That would be looking for a bearish retest of about that area there. Definitely a retest of, I mean, that's a given, the 14,750 area. That would definitely be a retest area, first area of support. But a break below this area here is going to be more bearish in tone going forward for you start breaking below that Fibonacci, or we talk about newer highs, newer higher lows. This breaking down below this would create a lower low, which would break a bullish pattern. There is what I'm looking for. All right, Dow Jones Industrial Average, not quite a all-time high, but again, very similar pattern where we've got a hangman doji at the top of a move here, and kind of talking tweezer tops here. Need a little bit more to go here in the Dow Jones to get that tweezer top, but somebody's breaking into the office here. E-mini S&Ps, again, all-time highs here, just bleeding to the upside, despite the fact that those new home sales were a little bit lower. You can see that's where we got the blip to the downside, but everybody's shrugging that off as the market's continuing to move higher here. Now, a couple of things I wanted to talk about was the Apple, Amazon, Google, a lot of the big names coming out with the earnings this week. As a matter of fact, tomorrow after the close, Apple and Google are having their earnings. So I'm going to be looking to play those, keeping some powder dry, or just keeping some money on the sidelines there for that. We've had about 20% of earnings go so far today, or up to today, I should say. But the big names, the tech sector is this week. A lot of the banks and stuff I don't usually like to trade gets me a little bit of an idea as how earnings are going to go. Now, we've gotten better than expected earnings recently and just not had a whole lot of follow through on these. So that's kind of the mantra I'm expecting here going forward through these earnings is the forward guidance is going to be key. We've kind of already got a pretty good idea as the earnings are going to come out a little bit better than expected. Market maker moves in some of these underlyings is outpacing what we would expect. I'll talk about some of those in when I'm talking about tomorrow. I'll really drill down on these earnings trades and how we're coming up with some of the mechanical process in order to find those. I'm not going to dig into that today because today I want to spend a little bit of time. My platform gave me a little bit of fritz, and I lost all of my stuff to throw on here. So we're going to go through this just really quickly, show you how I get this, because I've also gotten a lot of feedback from you folks, and I appreciate that you guys have been asking about what is that blue stuff over there on the side. Well, on the floor, we used to call that the Stoudemire, and what it was a pricing. It's kind of a build on points and figures, if you will, where you do the X's for the time frames that are there. So market profile is an extension of that, and finding the price where we have transacted. And when the most transactions are going on, folks, that's where the market finds value, is the psychological level on that. So if you want to learn how to do the market profile, what you need to do is click on this little beaker here and go over here and hit monkey bars. M-O-N-K, monkey bars right here, and then add that to the side, or double click on it. You can do as well. For some reason it's slowing down there. Go back in here, automatic 30-minute chart. That's what we're looking for the monkey bars. And on expansion, yes. Now, if you wanted to build this out to where it's more of in line with, so this is just going to be the numbers. Now, the thing with the numbers is those are the time frames. Every 30-minute, it'll add on a time frame. So the idea is when you get a big bell curve build out, the biggest part of that bell curve is the point of control, which means that's where the most time has been spent. That's where, when you have a specific price in your mind, if it's something always trades there as a trader, you have a tendency to look back at that, and that number becomes very comfortable or very comforting, because you know that that's where value is. So anything extended above that, you have a tendency, if you're long, to want to cover it. And if it goes too short or below you, you want a tendency to get out of that. So the market profile will give you a little bit of a visual representation of those prices, especially for the underlyings where you're not used to trading them a whole lot. This will tell you where the most time has been spent. We get back down there, you're going to see this market start to settle down. And the idea is, until a new volume profile or market profile here shifts to the upside, finds a new paradigm or a new point of control, then if it shifts higher, that means price is being accepted higher. That's a bullish assumption there. Now, if you get too overextended outside of these areas, this is where 70% of the time has been spent. So you can imagine when it gets up to these price levels, that's a little bit overextended. If you're long, you're thinking you want to cover it. And if you are short here, you're probably really worried about another all-time high. So there's all of these emotional feelings going on at these extreme levels. That's why we start seeing major pullbacks and some more volatility at these areas, because of those psychological aspects that are going on with people. So we added the time profile. Now I want to add the that was the monkey bars. Now I want to add the volume profile to that, because the volume actually tells you how much has transacted there. And that is, putting your money where your mouth is. If we just are sitting here complacent at a price level and we're not transacting, that's a little bit different than if there is a lot of transactions going on. So when you see major transactions start to pick up, that's usually a sign of finding that top or finding that bottom as the counter parties start coming into the markets here. So then I want to go down to volume profile. I don't know why volume profile. All right, so then I want to add this, apply to the side there. I don't know why the volumes, it's going to take a minute, I guess, to add here. Volume. I don't know why it's not pulling up. Sorry, guys. There we go. Volume profile. Add that. There we go. You used to be able to double click on that. So this is where the amount of transactions have been happening. You can see they're just slightly different locations, but all at the end of the day, you can see that 70% of the time and volume has been spent a little bit lower here in Apple. Now there's a little bit of a bump node here building out. Those are the things I'm talking about. If we saw this build out to be where the volume transacted, that would be price accepting higher. So all of these folks that were in and around this 125 would then be accepting price at around 135. Okay, so paradigms start to shift higher, price acceptance, that becomes very bullish there. But when you're overextended to these areas, to me, that's opportunity for downside. Just on any whiff of bearishness, the market has a tendency to really snap to the other side. As you can see on the last time we got up and around this area on the snap to the back downside. All right, so that's what I'm keeping an eye on. That's how you add the volume profile, market volume, and monkey bars to the side there. Another thing that's great, it gives you a little bit of expansion so you can see future earnings coming up. The other thing is it really gives you a representation of, hey, I feel a little bit overextended to the upside here. Maybe time to cover some of my longs down here. This is an opportunity where you're thinking it gets a little oversold, a little pricey. All right, so that's what we do with the volume profile. And I actually even have a full-on webinar on digging into the volume profile. So please check that out as we talk about trades in and around that in that video. All right, that's all I got for you guys. Remember to subscribe, hit the notifications so that you guys hear when I'm popping on here late in the day. Comment over the side. I'll circle back around for you folks, make sure everybody's clear concept. And finally, make sure you smash that or take that. Bye for now and take it easy.